How's it going, everybody? My name is Antonio, and I'm on the barbecue today on November 1 with Sam Lee, the president and CEO of Northisle Copper, a copper development company with a copper porphyry asset in British Columbia, specifically on Vancouver Island. Who's not here with us today, though, is your financial advisor. This conversation is not going to include any recommendations to buy or sell anything. Instead, it will be just a casual talk between two people on the internet. And if you haven't been burned yet, you're not supposed to blindly trust people on the internet. So for as far as you as a listener or viewer are concerned, this is going to be a conversation that's general and impersonal in nature. And it's definitely not a conversation that you want to use as independent research, because it's also going to include a lot of forward-looking statements about uncertain events that may or may not happen in the future. I'd suggest to take the minute to pause the video right now and read the full warning that is on your screen, because the mineral exploration, development, and mining industry is among the highest risk industries out there to employ capital in, which means that you risk a permanent loss of capital if you don't do more research by visiting setter.com and analyzing the company's official filings, as well as consulting a professional investment advisor before taking your own decision in the end. That all said, Northisle is listed on the TSX Ventures Exchange under the ticker symbol NCX, where an average of about 100,000 shares trade each day. That's a market cap of about 55 million Canadian dollars at the time of recording of this video, give or take. There are about 213 million shares outstanding, and that makes for a 24-cent stock with a 52-week high of 32 cents and a 52-week low of 12 cents. There are also about 5 million warrants at 28 cents, as well as 13 million stock options. They're ranging between 7 cents and 40 cents, a wide range there. And that would make for a total for a total fully diluted number of shares of 233 million. About 13% of the company is owned by management and directors, or let's call them insiders, because that's what it says on here. Then almost 20% of it is owned by two individuals. One of those you might know. His name is Michael Gentile. 11% is owned by institutions, and then the other, what is left, about 60%, give or take, is split evenly between retail and other high net worth individuals. At the end of the first half of this year, so back in June, Northisle had about $6 million in cash and about $500,000 in accounts payables, but no long-term debt. As I said at the beginning, Northisle's copper deposit is very fittingly to the name, based in the northern part of Vancouver Island. So it's north, and then never mind. The copper porphyry they're sitting on lies beneath a land package of 50 by 8 kilometers. So it's the biggest land position in, if I'm not mistaken, on Vancouver Island. There is one confirmed deposit on this land package and a second historic resource, as well as multiple other potential deposits here, so exploration targets. A total of 4 projects. So 4 separate projects, each in different stages of the exploration development cycle. And the main focus and most advanced project is the Hushamu deposit, if I'm pronouncing that correctly. It's about 1.5 kilometers long by 700 meters wide and 200 meters deep, and it has an indicated resource on it already of 305 million tons at 0.2% copper and 0.3 grams gold. There's Somali, and there's even a rare earth in there, but again, mostly copper and gold is what counts here. Next to that, so literally and figuratively, is the Red Dog deposit, which has an indicated resource of about 55 million tons, about the same grains of copper, so 0.2% copper and 0.3 grams per ton gold. And those pounds lie about 8 kilometers away from the Hushamu deposit, which means that if they were to go into production, this could be a supportive sort of ore feeder, basically, to the Hushamu. Well, basically, they're going to go into production together again, though, so these are your forward-looking statements, though, that I was telling you about. In total, between these two deposits, there are about 530 million tons at 4% copper equivalent, about half of which actually copper, and then the rest mostly gold, but also, again, moly and one rare earth, with that being rhenium. And there's also another about 420 million tons in the inferred category of the NI 43-101 at 0.3% copper equivalent, split sort of in the same way as the indicated one. Looking at the 2021 PEA that they did here, it's about $1.1 billion MPV 8 at 1650 gold, 325 copper, and that's asking for $1.4 billion in capex. but that was 2021. So an inflation adjuster is probably prudent here. And then back then that showed a 19% internal rate of return. So 19% IRR. As to the exploration project, so that'd be the other two. The current focus of exploration here in 2023 has been the NorthWest Expo target, where a gold-rich zone was intersected and reported in late September, where we saw a hole, that'd be specifically hole 13, hitting 130 meters of 1.65 grams per ton gold and 0.3% copper, which is that would make for an almost 1.6% copper equivalent, though again, it's obviously more gold than it is copper. And then some holes have also been drilled at the, as far as I understand it, at the Pemberton Hills target, which is another target. It's a 3.5 kilometers by a 1.5 kilometer area with a similar geophysical footprint to those at Hushamo and Red Dog. There are currently 14 drill targets have been identified within that range, hopefully to be drilled in 2024. So far in 2023, though, the focus has again been on the NorthWest Expo project, as I said. So there's almost 8,500 meters have been drilled in 19 holes. 5 of those have been assayed and reported, and 14 more are pending, with the third and the last phase of the drill program already having started late last month, which intends to follow up on the Gold Ridge zone. So there's quite a lot going on. Needless to say, much to talk about too, which means that it might be a good idea for me to shut up already and give Sam here a sizzling welcome to the barbecue. So Sam, thank you for investing in time with me.
Thanks very much, Antonio. Very impressive overview of the company. I don't think I could have done it better myself.
Anything that I missed or said wrongly though?
Well, like, I mean, there's a lot of, as you say, there's a lot of things unravel as part of this story. I think that you're spot on when you say that we are focusing on a gold-rich zone within the copper porphyry. I think this is what, quite frankly, differentiates us from any other copper porphyry development story out there, is that we do have this extremely significant gold component that 130 meters that you spoke about, you referred to, that's about over 2.01 gram per ton gold equivalent over 130 meters. So that's about a 270 gram per meter interval hole. So in all respects, this is a very, I think a very strong probability discovery hole with respect to finding the porphyry source, which clearly is highly mineralized. So I think that's, that certainly was our focus for 2023. You talked about our, underpinning asset in Hushamo and Red Dog, for which we do have that PEA of approximately $1.1 billion NPV. I do think that you're correct in saying that given the costing was done in 2021, there should be an expectation around cost inflations. But clearly at $3.25 copper prices and $16.50 gold prices, which you referred to, there's also quite a significant, migration towards a much higher analyst consensus long-term forecast for both copper gold. I think also very important to note, we used a $10 per pound molybdenum price in that study, which clearly has more than doubled during that course of the period. And rhenium, we use $13.50 per kilo, which can fluctuate dramatically to over $10,000 when we're not in a COVID environment where people aren't flying and using airplanes, obviously. So I think that what listeners, viewers should really understand is that PEA underpins our valuation at the $55 million market cap that you had referred to. We are trading at a paltry sub 0.05 times our net asset value, as determined not only by our PEA, but the 3 analysts that cover us on an analyst consensus basis. And so that's what gives the confidence, certainly, for our shareholders, and myself included. I'm a quite significant shareholder. Chairman is our largest shareholder. Michael Gentile, you mentioned, is a 9.9% shareholder. It gives us the confidence that the underpinning value is there for these types of copper gold porphyries. Obviously, 80% of copper demand in the world comes from porphyries, these types of systems. We're in an environment now that I don't think there's a single person in the market that doesn't believe in the copper proposition, the electrification proposition. But it is a bit of a medium to longer term proposition, which is why people are a little bit, quite frankly, skeptical in giving us the valuations that we have today. But in this environment where gold is, over $2,000, at least it was last time I checked, gold traditionally has a much lower capital intensity in terms of project size. It also has a much lower cost of capital because, as we don't know, gold trades at premium valuations. Is more like a currency than a commodity. That's why we think that the strategic nature of our porphyry system, having this amount of gold, it is just a tremendous opportunity for us to be relevant not only in the second half of a cycle, which we all know is coming, just the question is when, but to be relevant during the entire course of a cycle. And that's what the gold brings to us, and very few of our peers have that ability to bring that into the equation.
Gold is actually, unfortunately, just dipped below 2,000 there. It's a hawkish hold, as they call it, is expected today. So we'll see that's in 40 minutes actually of recording this. So an interesting moment to be talking about. And also, you're right. So you're one of the few CEOs actually that I've interviewed recently whose stock is not close to its 52 weeks or even an all-time low. You're actually up 35% year to date, but you are down over 50% since the beginning of 2020. So maybe you can talk to me about what the story is that price action is telling us here, where, it falls over 60% in about a year and a half, actually. And then it goes back to, again, it nearly doubled when you had those long gold intercepts. But what's the story behind the move prior to that?
Sure. So just by way of background, I'm a metallurgist by training, but I spent the last 20 years at CIBC. I ran their Western Canadian Vancouver practice, focused on M&A. My clients were obviously the big incumbents in the mining space. And there was a very significant period during those 20 years where most of my $100 billion worth of M&A happened in the period of 2006 to 2011, right? So to me, that was the epitome of the second half of the cycle that I was just referring to. As we know, that part of the cycle was driven through the electrification demand coming almost explicitly from China, through the urbanization of people coming into the cities. The Chinese had to build out their grid, and that was a massive impetus around this insatiable demand for copper that built a high of nearly $5 during that period of time. And it, of course, drove consolidation, it drove development, and it was a really robust time for the industry. When I identified in 2019 that this was, we were kind of on a precipice of what I was thinking was going to probably happen entering into the second half of, or entering into the new super cycle. That's when I joined Northisle in 2020 of October. Excuse me. This was well before the narrative around copper and electrification and decarbonization had really taken a hold. The idea of that progressive theory has been around for a while, but the narrative hadn't actually come into fruition. So when I came in, I had full conviction around this, and as you mentioned, we have some options outstanding. I took my entire first year salary in 100% options, priced obviously the day that I joined. And since that time, we have outperformed the vast majority of our peer group. So, reference point since that period of time, we're over a 2x, and we're up to about a 4 or 5x, as you referenced, in 2021, which I think was when that narrative perhaps got a little bit ahead of itself around copper electrification, given that we were obviously had quite naive impressions of how the COVID effect was going to have on us post the pandemic, obviously retrenching. And that effect was obviously supply disruption. It was recessionary fears. It was massive increase in interest rates. It was wars around the world. And so this culmination of events really did pause the overall thesis and narrative around copper. And I think that, as I said, the positive part of this last 2.5 years is that at least now the belief in copper as being the primary electrification metal is steadfast in people's understanding in their head. Everyone accepts it. There's no, there's so much data out there that suggests we're 8 to 10 million tons deficit by the end of this decade. We need to spend over $750 billion in order to get to our electrification decarbonization goals by 2050, and on and on and on. I think if people understand now very clearly what the medium to long-term proposition is. However, when you're in a risk-off environment like we are today, when people are looking at just putting their money in high-yielding bonds that pay them 5 to 6% on an annual basis, and you don't have that risk appetite, which is completely understandable, then longer-term propositions like copper and electrification and decarbonation, there is a little bit of perhaps over patience and maybe even a little cynicism to it. So, I think from a macro perspective, that's why you're seeing companies vastly underperforming in the copper space since the period that you've just described. We have overperformed or outperformed rather, because we have this element of gold, right? Because it's almost like this anti-correlation when there's uncertainty in the world, when there's a flight to safety, when there's a need to hedge against inflation, all the things that drive gold as a currency, not a commodity, and gives gold the premium, that those usually fall into play in juxtaposing ways against what is happening on the global growth scale. And so that's where we find ourselves today. We find ourselves in an environment where we are subjected to all of those risk factors that really have impacted investor sentiment. And so that is why I think it's absolutely critical that we can appreciate, and investors can appreciate, the leverage that this project, our project, Northisle as a whole, has towards gold. Because porphyries in general, as I said before, they supply over 80% of the world's copper production. So there's an inherent need for big, large porphyries. But as you referred to in your opening remarks, they're pretty significant in size, right? They from a cost perspective to develop these things, they are quite significant. And so I guess the competitive advantage we have as it relates to all of these pods of exploration and potentials to build resource bases around starter projects that bridge you into the larger projects, I think is essentially helpful. And that's what the market is starting to pay attention to now. I think 130 meters of over 2 grams per ton of gold equivalent is also one of the better holes, or one of the best holes you've seen over the course of the last little while, and obviously not only signifies a discovery hole, but also something that is higher probability given the width of this hole as well.
Mm-hmm. There's a lot to touch upon there, but you're touching upon an important point here too, is that when, if someone were to open this sort of cold turkey and see, okay, $50 million or $55 million market cap, capex $1.5 billion. This thing, people know that they're either going to need money or it's going to be taking over. What exactly is sort of the strategy for you here? Because indeed, these things are big. They're going to cost money. You're looking to expand it, as far as I understand so far, and we'll be talking about that too. But so it's going to cost even more money to bring into production, unless, again, is what you were referring to, start with a smaller, sort of starter pit. So what's the strategy there? Looking for a strategic, doing it yourself, or looking to sell?
Yeah. So looking to sell, go backwards. Looking to sell is never a strategy. It's a result. It's an outcome of doing a very good job of developing the story, right? And then so again, working backwards from that, looking for a partner. Well, we're certainly in an environment right now that suggests that partnership around your strategic goals is prudent, right? It's not, something that is quite frankly credible to go about, looking at $1 billion projects when you're a $50 million market cap company. So that's something that certainly falls within my bailiwick. My background, as I mentioned, is in investment banking for 20 years, and so that's something we are going to progress methodically, judiciously, something that doesn't dilute our current shareholders to the point of neglecting their need for a pretty sizable return on this opportunity. And so then that kind of leaves you to then how are we going to then do that within the context of the capital that we have? Well, it's through exploration, it's through the drill, but there's no doubt about it. Anyone that tells you otherwise, I think is quite mistaken and perhaps even naive. But if you can improve your project through finding higher grades, more tonnage, obviously that is the goal here. And we're blessed with 50 kilometers worth of this porphyry district that starts from the Island Copper Mine, which is a historical BHP Island Copper Mine just 25 kilometers away, which has contributed to the second to none infrastructure that we have access to right now. So the landscape as to what we have is we've got an area that was built out by BHP about 30-40 years ago to essentially produce the similar amounts of copper and gold and rhenium and molybdenum from a mine that's only about 25 kilometers away from where we are. And so think there, instead of a camp, there's a town that's been built pretty much for this type of environment. You've got natural renewable power sources coming from BC Hydro. There's over 100 megawatts of excess capacity that we can draw from for our project. And we have got 2 substations less than 10 kilometers away. You got, BC's largest wind farm. It's just to the north of us, producing pretty much that 100 megawatt capacity. You've got access to an abundance of fresh water, which, around this time, viewers and listeners should be understanding that these massive projects that are being, that are billions of dollars to build. And of course, CapEx expansion is just a function of how big the initial capital is. And so what we have is an area that has over 3 meters of rainfall a year. So to be able to collect that fresh water, and on top of the abundance of fresh water that we currently have access to, is probably singularly the most important commodity, including energy, right? Energy and water that really sets the stage for how brilliant this project can be in terms of its developability. So that's kind of the boring engineering stuff. Again, I'm an engineer, so I tend to talk about it a little bit too much. But then in terms of, okay, then how do we justify capturing the imagination of an investor? Well, we have 1 billion tons right now, or almost 1 billion tons of resources. We've got a lot of copper. We've got a lot of gold, over 5 billion pounds of copper equivalent. It is lower grade, which is traditionally what you see in BC copper porphyries, because BC copper porphyries don't have what we call a capping structure, a lithic capping structure. It's all been eroded. So these hot fluids that carry all the mineralization, they tend to either dissipate or erode. On the island, because we are separate from the mainland geographically, we do have that capping structure, that lithic capping structure that we see in Chile and Peru and all these other areas that have these higher grade systems. And so we are blessed with, just as you pointed out initially, a vast array of targets that we are now showing evidence that can hold much, much, much higher grades, potentially even spectacular grades within the porphyry system. So that to me is the opportunity, certainly today. I think that building out this project into a developable project as we've described, as we can see, the infrastructure, the political will, the social will, well, that has to come through partnerships. So right now we're exploring partnerships, not only on the strategic levels, but also through governments and First Nations involvement. And I think that is going to be critical to be able to ensure that we can get to a point where we see production coming out of this project within this decade.
What does that mean more specifically when you say building out this project? What does that mean for this project specifically? Like drill Northwest as you're doing right now, get an MRE on it, or are you thinking PEA just with?
Yep.
I mean, a new PEA with the added pounds? How are you looking and building that out?
So let's start with NorthWest Expo then, because I do think that that's again where the focus is today. So it's essentially building out a resource estimate. So we've publicly gone out and stated that we are looking to define a 40 to 50 million initial resource within NorthWest Expo of around 1 to 1.2 grams per ton, 0.2% copper. So from a gold perspective, that's 4 to 5 times higher. We're confident that we can establish that. I think we've set out our goals to have that at the end of this year. We've been drilling, obviously, not only this year, but also initiated that drill result last year with also the support of historical drilling. So we've got a reasonable understanding of being able to define that. So what does that conceptually do? Okay, so, and this is conceptual. There's no studies out there that's public, but we are certainly internally developing the thought process here. So if you think about the 40 to 50 million tons, right, that's essentially what a Tuckanzina is, which is G mining. That's essentially what Kaminak coffee mining was. We obviously have another deposit right beside called Red Dog, which we referred to. That's another 50 million tons. Lower grade, but zero strip ratio. Putting that together, 100 million tons, about 1 to 1.2 grams per ton. That's a reasonable project to understand as being a potential starter project, right? Something that would be much lower capital intensity. It would be significant gold production. It would be material copper production. And it would effectively be utilizing all this wonderful infrastructure that I've described. And so that could potentially bridge you to the 22-year project, which we've defined through the PEA. After the 10 years, funding the bigger capital expenditures, reducing the need to do dilutive financings or selling significant portions of the project, and effectively creating a 22-year proposition, which is defined by our PEA. Into a multi-year, 30-plus year proposition with a much lower capital intensive project at NorthWest Expo. That's the logic behind what we're doing initially, right? Is to build the answer to, well, how are you solving for the problem that Hushamu and your PEA project is too big from a capital intensity perspective? Well, we've seen many precedents out there, gold precedents, where you have higher grade gold projects that can be used to bridge into much larger. Artemis is probably the most, or Blackwater is probably the most close example to that structure. Having said all that, again, the exploration is something that is very intriguing at this point, because within that exercise of trying to define this envelope at NorthWest Expo, we have now come across this 130-meter hole, and within that hole, there's 15 meters of hydrothermal breccia, porphyry stockwork that hosts approximately 5 grams per ton of gold equivalent, which is significant. And within that distribution, it's predominantly gold. It's about 80% gold, about 20% copper. But it is within the copper porphyry. And so the significance of that is clearly that hydrothermal fluid is coming from somewhere. And we found this intersection only 65 meters from surface. And it was highly mineralized. And so if there is an ability, and there is obviously the ability, to try to trace and track the source of those fluids, then we will have found the meat of the porphyry, which we know hosts extremely high gold grades and copper grades, right? So the real question is, how deep is it? Right? Because we know it's there. It has come from somewhere. The question is, how deep is it? Is it economically viable to, to go after something that's thousands of meters deep, which it could be down there? The answer is, the higher grades you have, the deeper you can go. And so that's the proposition here. It's like, let's trace this. And the good news is that we're starting at 65 meters right now, right? So let's track this. Let's continue to figure out where this source is coming from, this highly mineralized source is coming from. And at this point, we are currently drilling, obviously, we've just completed our resource estimate drilling on the envelope that I just described, the 40 to 50 million tons. And now we've stepped out. We are stepping out and currently drilling what I would describe as scout holes to understand where specifically this high grade breccia 5 grams per ton gold equivalent is coming from. And that's going to be our path forward for 2024 program.
How's the topography, by the way, there? Because what I'm thinking about is, because looking at the Ring of Fire and what other deposits are in the Ring of Fire, they're deep. Not many of them subject to block caving mining methods. Obviously, forward-looking statements, way too early probably to talk about something like that. But just by the gut feel that you're getting for this thing, is block mining completely out the window, or is it half on the table? How do you look at it?
Yeah, so currently this envelope that we're looking to define with the NorthWest Expo comes right to surface, right? So we are contemplating an open pit internally. Again, this is conceptual. There's no study that's publicly been, but conceptually, anything that comes to surface is open pittable, clearly, right? And the fact is, actually, the highest grades that we see up dip are coming towards surface, right? The question then becomes, what is a strip ratio? So if you look at our presentations, you'll see this is initially, right? Our initial drilling suggests this is, more of a tabular form that comes up to surface, and there will be an increased strip to what we currently have defined in our PEA. Having said that, again, to surface with these grades, that's exceptionally strong from an economic perspective, from an NPV perspective, because you obviously would mine the higher grade portion first if it's closer to surface. So the answer to your question is, your question is, is there a consideration around block caving? The answer to the question is no, because everything that we found, including Hushamu Red Dog, which is just zero strip on top of a knob hill, and NorthWest Expo, has been at surface. The third opportunity that we haven't even spoken about is the very, very large Pemberton Hill system. Notice I haven't called it a deposit because we haven't have a discovery hole yet. But the system, as you, I think, referred to in your opening remarks, and perhaps I'd like to correct you, you said 3.5 by 1.5 kilometers. It's actually defined by 6.5 kilometer lithocap by 1.5 kilometer wide lithocap. And we spent about $4.5 million with ourselves and our past joint venture partner, Freeport, determining that it's tilted very acutely to its side towards the southwest, which means that the alteration that we've mapped expands not only 1.5 kilometers wide, but 5 kilometers wide. So all that to say that a 6.5 kilometer long by 5.5 kilometer wide lithocap or alteration system would mark this of the size as a Batahiju or a Los Palambras. So this is a very, very major-esque type of system, which will cost lots of money to drill. And we've obviously, to your point, we've drilled 2 of the initial 14 discovery holes that we've outlined, or we're drilling them right now. But if we were to find the system, then or excuse me, if we were to find the porphyry source, then that would most likely be an underground proposition because of the fact that it's underneath a massive lithocap. So we clearly haven't found it yet, so we haven't determined whether it's a block cave or not. Having said that, if we do find it, potentially with a partner, then that would make our open pit at surface projects, all of which we are currently developing today, that much more interesting, right? Because if you think about the sequence that we have here, we've got NorthWest Expo, which is the high-grade gold proposition within the copper porphyry, but that's the starter pit to the Hushimu proposition, which is the 22-year project, right? But it's still very little strip ratio, very little hurdles for developability. But then that could be the starter pit to the new discovery at Pemberton Hills. So we're sequencing this in a way, as you can see, where there is the ability to conceptually see how this starts as a phase 1, phase 2, phase 3 project, with, of course, phase 3 being Pemberton Hills and something we haven't been able to define yet. But stay tuned. As I said, we've been drilling modestly around it, and we appreciate that Pemberton Hills is such a big system that it will, at one point in time, require a major to come in to help facilitate the drilling for resource definition.
Again, lots to touch upon here. I do want to talk about you potentially, drilling a big hole in the ground there. That's also, it's a concern that we should touch upon. Something else, though, that I'm noticing here is that this whole thing seems to, it has levels to it, basically. And the deposits that you have defined now, they have multiple minerals in them. And so you have that gold ridge zone at NorthWest Expo. And it looks different geologically, at least metallurgically, it looks different from Hishamu and Red Dog. But again, also different metals. Is that rare earth there, rhenium, that we don't typically see in that? Does that make the metallurgy challenging? And are you planning any updated metallurgical studies for 2024?
Yeah, no, this is a great question. So Hushimu, Red Dog, we did the PEA based on the same type of metallurgy that BHP progressed with their project at North Island, the Island Copper Mine, which is only 25 kilometers away. It's part of the same 50-kilometer porphyry district that we're dealing with. So they had the same primary metals, same byproducts. So they produced a copper concentrate. They produced a molybdenum concentrate. The gold reported into the copper concentrate, and the rhenium reported into the moly concentrate. And copper, it's a premium copper concentrate, which is why they were able to sell it to the Japanese, who have the highest standards for copper concentrates, mostly because they have the lowest thresholds for deleterious elements such as arsenic. So all of that metallurgy has been done to identify that our copper concentrate would be premium copper concentrate with a high recovery, about 87% recovery for copper. The gold reported into the copper concentrate. So the gold, it makes it a very attractive concentrate, but the gold did not recover out very well because it was a secondary product, and because the grades in general were about 0.2% in the ore. 0.2 grams per ton in the ore, 0.25 grams per ton in the ore. So think about optimizing the circuit to obviously get the stuff that we want, which is copper, and the byproduct, which is gold. And when I call it a byproduct, I don't want to mislead you in the sense that it's still after a 47% recovery, the gold in Hushimu and Red Dog. It's still we're aiming to produce 100,000 ounces of gold recoverable for 22 years. So that's still a massive amount of gold production, even after a 47% recovery. The other way of looking at it is we're producing 100,000 ounces of gold, and 100,000 ounces are going to waste. So clearly, we are looking to optimize that program to see how much gold can we recover from like a pyrite concentrate. So it's almost like a waste concentrate. Are we able to leach it in a way that we can recover even an incremental 10% recoveries off of a 47% on a pyrite concentrate is going to be attractive. But that's Hushimu, where you have low grades, high tonnage, very little strip ratio, right? So that's what makes Hushimu and Red Dog work as per the PEA. Work very well in terms of the PEA. What we are starting to see, and it's not a mystery, right? Is that for NorthWest Expo, the higher grade gold zone in the copper porphyry is the recoveries are directly correlated with grades, right? And so the higher grade that you have, so copper reports into the chalcopyrite, gold reports based on the very limited work we've done on NorthWest Expo right now, reports into the pyrite. And obviously, if there's an interlinking of the pyrite and the gold, that's problematic. That makes it harder to extract and recover, right? And so what we're seeing as part of our deportment studies is that pyrite mineral obviously has a certain percentage of gold intertwined with it, but on the peripheral, there's the majority of the gold that sits on the peripheral of the pyrite, which you're able to liberate through conventional measures. And so the greater grade you have per unit of that pyrite, which is what we're seeing, obviously 4 to 5 times higher grade, the assumption and the correlation should very, very reasonably be the greater recoveries on a percentage per pyrite basis. So that's what we're obviously funded to do, and that's what we're doing. We just initiated that program a week ago. So yes, that's part of the program. I think I don't mean to say anything that's at this point unproven, but there is an expectation, a very strong expectation, that the higher grades will obviously cause us to look at higher recoveries processes for the gold, if gold is a majority of the revenue, which it is in this high grade gold zone.
Right. So in summary, recoverability specifically of gold, not great, but you're looking to improve that. I believe copper recovery was above 85% in the PEA of 2021.
Correct, and that's through the copper concentrate, right? And so that makes sense. It's through chalcopyrite, so it's associated with the chalcopyrite. So it's a very strong copper recovery. We were attacking the copper because it was, well over 70%, 60% of our revenue. So that's why we attacked the copper. In this case, this is a very high grade gold porphyry in the porphyry, and that is going to obviously cause us to look at processing techniques that is more akin to a gold project as opposed to a copper project, right? So, as I said, I don't want to set an expectation here, but usually these types of projects yield much, much higher recoveries than what we've seen, because the primary metal is gold, and you're actually trying to extract fully the primary metal in that project.
Right. And you mentioned penalty materials, obviously interesting or important, not only interesting, but important to note. So when you see the gold grades going up, are you seeing arsenic, mercury, cadmium, or something else that you think like a penalty material going up are you asking for those actually? Because I don't see you reporting them, so I don't know if you're asking for those, but yeah.
It's a very, very good question. So as part of our PEA study, we actually do have a full assay and full report on the deleterious metals. So arsenic was less than 30 ppm, which is effectively the threshold for the Japanese smelters that have probably the highest or the lowest tolerance for these deleterious elements. It is a very clean concentrate, so we know this very, very well. One of our board members, Kevin O'Kane, he joined us shortly after I joined. He's ex-BHP over 35 years. He actually was the chief mining officer for Island Copper, the BHP historical mine that was in production for 24 years. He was their CEO for chief operating officer for 12 of those years. So we have a lot of institutional knowledge around the type of product that we're selling here. One of the interesting stories that came out of it actually is that, as I mentioned, the rhenium reports into the moly concentrate, and the rhenium effectively For those that you don't know, it is, in many people's definition, a rare earth. It is a critical metal that supports, high temperature applications. So think aerospace, think defense, which is why it's a very critical metal in the U.S. It's extremely rare in terms of the fact that it probably is only about 1 to 5% of our production revenue, but would put us top 10 rhenium deposits in the world. So it's a very strategic metal, but it forms as a rhenium dust on top of a smelter after you roast the moly concentrate, right? And so what BHP actually did was they asked their Japanese partners to collect the dust, bag it up, and then just ship it back to BHP, which at the time that they ended up processing it in California to extract value from it. When obviously prices are most robust. So as I mentioned before, I alluded before, when we did our PEA, it was during COVID. There was a bunch of, demand restrictions around building new planes because no one was traveling. And so therefore, rhenium prices were about $13.50 per kilo. Well, BHP historically had sold it for, over $10,000 a kilo because they had the ability to process it in a very sort of controlled way, because it exists as effectively a dust that you process. You can process yourself if you have the means and the inclination to do it. So revenues ranged from about 1%. That's it's about 1% of our PEA to over 10%. It could potentially add about 10% to the revenues if we were to follow that type of process that BHP did as well. So from a processing perspective, it's a very conventional processing flow sheet, which is essentially a primary grind, secondary grind, floats concentrates, copper and moly concentrate with a pyrite concentrate, which may or may not be sellable. We believe the pyrite concentrate is saleable because we're only 25 kilometers away from a port. So the fact that we actually can transport it only 25 kilometers really reduces costs, which should add value to primarily getting the pyrite off of our site, but secondarily also retrieving the gold from it as well.
Right. Okay. So and that's the case for it all, basically, because I'm thinking NorthWest Expo is different though. Would that need a different processing facility?
It would absolutely be beneficial if we attack the gold. So think obviously CIL plant. Obviously that's kind of the traditional way to attack gold, CIL doré. We would probably produce a copper concentrate, given that there is a significant amount of copper in here as well. And then we would have to optimize the amounts of gold that were poured into the copper concentrate versus not. So that's obviously being considered right now as part of the MET work, as I said, which we just initiated recently for NorthWest Expo. But conceptually, think the fact that this is 4 to 5 times higher grade than what we currently have in the resource for Hushamu, we are going to look at optimizing the gold clearly, because that's where the significant revenue source is going to be.
Right. Okay. And that's something that you're probably going to be reporting on in 2024. So if we happen to have another conversation by then, maybe we can talk about the separation methods that you're looking into. That'd be interesting. Switching gears here a little bit, because I'm interested in figuring out, going back to what I noted previously here, that you were talking to me about an open pit. First thing that comes to mind, obviously, permitting. Like, how do you permit that? So talk to me just generally about all the permits that you have, and all the permits that you're going to need. Well, not all of them, because that's probably going to take us 8 hours to go through. But between now and potentially getting into production, like, government, locus, fish, deer, plants, everybody happy up there?
Yeah. So this is a good opportunity to perhaps discuss the elephant in the room, which is we're on Vancouver Island. People that associate Vancouver or have been to Vancouver Island, they associate it with old growth forest. They associate it with Tofino, nice surfing destination. They associate it with Victoria, which is where a lot of the NGOs, quite frankly, are situated. And where we are is on the northern end of the island. So there is a bifurcation of the island, which is a very industrial part of it, which is bifurcated from Camel River, which is approximately 350 miles away, and to the southern end of the island, which is Victoria, which is where a lot of the universities and the NGOs are. They're about 550 kilometers away from where we are. So the north end of the island has historically been a extractive resource center. It even currently is an extractive resource. Over 20% of employment in the North End Island work within the extractive resource industry. So that's mining, fishing, and forestry. When BHP had their mine, it was well over 90%. So I guess the north end of the island was built by BHP. Really, there was no roads, paved roads that went up to the north end of the island prior to the mine. There was the town was only about 700 people. BHP obviously made it a town of over 3,000 people. And then so there were certainly no roads, and there was no port that existed on the west end of the island, which makes this such an ideal place for this type of operation. So the very strong movement within Canada and BC in particular is First Nations consultation led by UNDRIPA, which BC has adopted, UNDRIP, which BC has adopted as DRIPA, which is the Declaration of Indigenous Rights. And it's something that fundamentally we believe in. Fundamentally, we believe that this is an imperative. We talked about partnership before. This is arguably our most important partner, right? So what we have done, which has been very strongly recognized by the government, is that we've signed capacity and consent agreements with our First Nations groups that effectively require us to get their consent prior to going through the permitting process. So what does that do? There's a lot of implications around this, and we probably wouldn't consider doing it if we didn't feel very strongly we had the will of the nation to progress and proceed with this project. And so what that fundamentally does is that gives them obviously the capacity and the understanding and the information to assess all the things that are done on their land. But as important, it then gives the government the confidence that this is a project that is worth expediting. So what does that mean? Well, you've got a government that clearly places a great deal of importance as a reflection of its people around reconciliation, and now critical metals, which we all know now the government has, identified over $4 billion out of 2022 budget to focus on critical metals. This is an imperative that has been very public. In fact, it just came out a couple of days ago with a bit of an action plan on how that's going to work. I can talk about that later. But within the government political will context, those are two very important things politically that they need to address. And when they see a project like ours that has the consent based approach and has the commodity, copper being the most important critical metal, certainly in British Columbia, that we possess, then you get your permits expedited. So the proof's in the pudding. We signed our agreements last December with one of the First Nations group. We received consent in the end of January. We then went through the provincial permitting process on February 4th, and we received our permits, all the permits that allowed us to do all this drilling, 14 weeks later. 14 weeks later. In British Columbia, it usually takes about 12 to 24 months, 12 if you're lucky, to get your permits. It took us 14 weeks from February 4th. Okay, so this is evidence that an approach like ours is going to create success around not only hitting timelines, but potentially expediting timelines. But you can only have it if you have the will of the people that support you within the context of your project, right? And I'm not saying everywhere in Canada you have that will, and if you don't have that will, my suggestion is, as an entrepreneur, look somewhere else, because it's going to be too painstaking to try to create that will within a broader community. But as I said, within our community, our broader community, it has always been an industrial community. It has always thrived because of natural resource extraction. And so that is absolutely essential in terms of identifying opportunities. And that's why I identified this opportunity, is you did have this will. And so let's convert that into consent. So these are obviously exploration permits, but exploration permits, these are 5-year, multi-year access-based permits, which I said take about 12 to 24 months to get in British Columbia. They even take that long in, say, Peru or other regions in the world, right? So exploration permits are usually not as easy as people think. But this is again a precedent where second to none, 14 weeks. I don't know of any jurisdiction, certainly in the Western world, that can produce permits that quickly. And the reason is behind that. So how are we then, to answer the second part of your question, how are we then using this model, this framework, to go after our development permits, which are going to take longer? Clearly, the prescribed timeline for a project in BC is about 2 years baseline studies, which forms a 2-year permitting process. So that's 4 years to get to a sanctioning decision, right? That's essentially the prescribed timeline in British Columbia. Well, how do you then make sure that timeline not only doesn't expand because of discussions that should be had prematurely, but also potential to contract when you have political will around these sorts of projects to go ahead? Well, obviously ours is step one, or phase one, of what our strategy is, the approach that we're taking. It's proven to be successful for MIAB, so for multi-year access-based exploration permits. And this is the type of approach we're going to take for the larger development permits.
And it's really the locos that, again, I care more about, because very topical, looking at what's happening in Panama, which, sure, Panama has sort of a watermelon government, so it's green on the outside, red on the inside. But the government signed the deal for that open pit mine, right, to continue operating for 20 years. But it's the locos who now are blocking it and want to hold sort of a popular vote, if you will, which wasn't always the case. So when you say locals are supportive, that's why I want to know more about that, how that works. Sure. Because we have now Weedy Lake, for example, if I'm pronouncing that correctly. There's a recreational domain of sorts to the north, and there's also another provincial part to the south, if I'm not mistaken. There's a large land, a large water body to the south of what I'm seeing, to your land package.
Yep.
Right. So how's the relationship with that? Because oftentimes it's not necessarily going to be the locals who are blocking, because you told me that's the industrial part of Vancouver Island. Sure, I get it. But sometimes there's going to be groups of people coming from elsewhere saying, hey, let's preserve this, piece of Canadian recreational domain. Yeah. So talk to me more about that.
Sure. No, these are really, really penetrating and good questions. So, and I'm very impressed you pronounced Weedy Lake correctly. So I think the answer to that is yes, this is going to have to be engineered in a way that protects the environment and does so in a way that you actually return it to a state that's as good, if not better, than you once was. Having said that, there is right now already a significant amount of disruption in the area, including the BHP Island copper mine that's only 25 kilometers away, that we are continually looking and working with our community partners and First Nation partners on finding ways on how we can repurpose some of these disruptive events. Because the belief, and this is why I feel comfortable around working within this community, is that the belief is that it's not that our project is not going to have any disruption. The belief is that let's use past disruptive events and repurpose them to identify economic opportunities that will obviously have a net benefit to the communities. That is the key. That's the essence for a community that is, I think, supportive of a project. You have to understand the net benefit of any project, and if the benefit does not outweigh the consequences, then obviously it's not a good project to advance. And if you have areas of infrastructure that you can repurpose to reduce the impacts of the negative benefits and environmental impacts rather, then you should be fully open to doing that. And that's where the collaboration and the consultation with the First Nations groups today is important, because then we get an idea of what's important. So for example, they told us that Hoburg Inlet, the second body of water that you just referred to, right? Don't even think about putting your waste in Hoburg Inlet, right? Great. We never intended to do that. They looked at, there's actually another body of water, it's a very small one, that would be impacted as part of the project. We flew over it with the chief of one of the First Nations group, and he just pointed at that and he said, that body of water is dead. It's acidic. So you don't have to worry about that. There's nothing living in that, or there's no fish living in that. You know what? We already did the testing around it. It's about 4 pH. So he was spot on. But it's good to sort of have these conversations at the beginning and to ensure that these, red flags are brought up initially. And so far, we have not seen any red flags that have deterred us. Like, look, I keep on telling people, if you look at my background, you could assume that I'm not going to be spending my time and energy in an opportunity that is going nowhere or that has hurdles that are just too big to overcome. And so, I think that given the fact that we are looking to solve a problem that the world has, which is securing critical metals, we are looking to do it in a way that that enriches and fully embodies the belief that our First Nation partners have to benefit with us fully, which is absolutely a fundamental principle of ours. And if everyone is in concert with those fundamental themes, that the project should benefit from it, will benefit from it. And that's something that is worth, our time here, which is probably the most valuable thing at this point. So, until there is something that shows something that, supports against that, then we'll keep on moving forward. As it relates to opposition, as incredible as it may sound, in the 3 years, I have not faced zero opposition, not one opposing voice. And we are pretty vocal about what we want to do here. That's a very good sign. In the last, I guess, my predecessor who ran it for 10 years, I think did a very good job of informing the communities what is being contemplated at each stage. And as far as I know, he did not receive any opposing threats for this project. And so this is also indicated very strongly by the government's support for us. When we announced our First Nations agreement in December, the Minister of Energy, Mines and Low Carbon Innovation actually provided a quote of support in our press release to say that this is actually the model that we are looking for in British Columbia. We want to be the epicenter for critical metals projects in the world. Copper is obviously the most important one for us. These guys are doing exactly the right thing. And so that has now evolved into the government asking us to go on roadshows, which we will be doing in about a month's time. We're actually going to be in London for that very purpose with the new Minister of Energy, Mines and Low Carbon Innovation. And because we are really viewed as being one of the models that our province needs to aspirationally get to in order to have that consent piece in place, because it is a very important part of the timeline equation. So I do have to say that the biggest concern right now that surrounds a lot of people that don't know the story is that you're on the island, you're never going to get permitted. I can show evidence right now that we actually not only can get our permits at the stages that we are, but we actually get them in a record time. I can obviously state that we have the political support of the local MLA, who happens to be the party in power, NDP's party whip, and of course the ministers associated with giving out these permits, as they've been asked us to engage in these types of marketing efforts. And if you can get your head around that conceptual lock, well, this project then should not be trading at a 0.04 times its net asset value, because our peers right now are trading currently within the same province with smaller projects at significantly higher multiples than that. So if you can get around that conceptual lock, therein lies the opportunity, which is why myself, Dale Corman, Michael Gentili, people that actually know this this area well, and have done their diligence and have spoken to ministers and have spoken to deputy ministers, they know that this is a very different part of the island, a very industrial part of the island. And if you get your head around that, that's where the opportunity is.
I'm glad you're mentioning your predecessor, because it's been there's been operations within your company for a while there, and you said it's worth your time, but I'm thinking, is that the so sort of the stigma that is around, oh, it's in Vancouver and it's on an island, is that what's keeping others away from that? Because there's not many companies operating around you right now, not many exploration companies. Looking at the map, you have the largest land package, but there just aren't that many. So how come is it worth your time but not many other people are sharing your opinion there?
Well, that's actually a really interesting question. So from a staking perspective, just by way of background, you mentioned my predecessor, Jack McClintock, discovered spence when he was at Rio Algom, which is obviously one of BHP's more material mines today producing. And he was absolutely in love with rocks. And he was brought in 2011 when this was spun out, to consolidate this region, to make sure that he had the best package possible in a region that, if you believed it's the developability of the region, which again, only a few people who've actually visited the region know what I'm talking about. Like, this infrastructure is second to none. 25 kilometers away from a deep sea water port, closest to Japan from continental America. Paved roads going into the project, right? There are companies out there that are trading at much higher multiples than we are that will take 20 years to get an access road approved. We have paved roads going into we've got hydroelectric power, over 100 megawatts of that power capacity available to us as per the BC Hydro study that we just performed, right? We've got a town only half an hour away that can house up to 3,000 indirect workers, which is what BHP's size was at the time. So these are all things that are second to none globally, right? So if you believe that that's what's there, then it's your prerogative to try to accumulate as much of the best land package as possible. And that's what Jack did across that 50-kilometer district that we own. Is a continuous 50 kilometers of our tenements that have been parceled together by Jack. And of course, the most important ones were consolidated by Jack that now informs Red Dog and Hushamu. And what attracted him, the man that discovered spence, it was the rocks. The first question I asked him as part of my due diligence is, what made you come to this area? And he said it was absolutely the rocks. And what does that mean? Well, the way he described it, and I don't mean to sound over promotional, but the way he described it, a geologist, very hardcore geologist, was that because of these lithocaps, right, that we do not see in British Columbia, but we see everywhere in Chile and Peru, and because of the top cover that we have on our area, like the trees and the vegetation, it's not as obvious that these lithocaps are as massive as they are. And so the analogy he put is that if this were in Chile, right, where you see no top cover and just these massive bubbling lithocaps that come to surface, this thing would be drilled like Swiss cheese. But the disadvantage we have right now is that we do have a lot of top cover. We do have a lot of shrub that hides the structure and the potential outcroppings of the mineralized zones. But that just means we have to be smarter and better at how we identify these things. And that's why, again, our emphasis right now is good exploration, which can lead to excellent discoveries, especially in this area that is separable from the rest of British Columbia.
When I first opened up the map, I thought, like, okay, maybe it's drilling costs. But then I started looking around, and you told me that you have roads and stuff like that. I do assume you still might be using a helicopter. I don't remember. I think I saw it somewhere, but I think you might have to use helicopter-supported drilling for some parts. Well, yeah, let's maybe talk about it. What are you paying there? Is it sort of between the 500 to 800 a meter, or is it more than that?
So this year was all road-based drilling,
Hmm.
and all in, including camp, GNA, including camp, GNA, it's just over $400 a meter. And
So it's not, yeah.
that speaks to the access to roads. So we all know what the costs and expenses of these, these massive programs in the Andes cost. They cost thousands of dollars per meter.
Hmm.
This speaks to the infrastructure. And it really defines this as being a very competitive area to develop because of that fact. We don't need our drillers drive 20 minutes after they've done their shift. They drive 20 minutes back to their hotel room, right? Versus, if you're in the mines, you need 2 or 3 containers per drill to sustain a village of people that have to live up there to actually drill these things, right? So, I think it's a really good thing you bring up because, again, $400 a meter is exceptionally good. Your point is well taken around helipads. Like right now, all of the access roads have been opened up for us, not for us, but have been opened up. And so there's been logging for, this is third, fourth generation of logging in the area. So there have been lots of areas that have been opened up. There's probably a network of over 100 roads that have been, created over the course of the last 4 or 5 decades. So it's sufficient to target our areas of drilling. But yes, if there is an area that we need to drill that requires pads, the cost is closer to about $700 per meter. And we have done that in the past, and we probably will be doing that in the future. But the program that we had this year was expressively, it was road based. So one of the things I do want to point out, it's good, don't need to get too much detail, but you're asking good questions. That 130 meter hole, and you can see it in our presentation, has essentially gone sideways, parallel to the dip of the mountain, right? And so where we hit the intersection, and the reason behind that was because we obviously wanted to drill off of a pad that was on a road, right? We didn't want to have to do a helipad that just went down through here. So the intersection of that 130 meters, I can't even remember, was about 200 meters, but that's not the depth. As I said, it was only about 65 meters from the surface. Right. So, perhaps that's one of the, negative things, being beholden to drilling off of a pad on a road is you probably do have to drill a little bit farther meterage to get to the point that you want. But we've actually done the cost benefit analysis around that. And it's actually cheaper to do that than to do a helipad and lesser drilling. So, it's an interesting exercise to consider.
Sure is. If we look at the land package, though, what project would you have to use helicopter-supported drilling for between Hushamo, Red Dog, NorthWest, and
very good question. Very good question. So Pemberton, we have already done pads for Pemberton. For the 14 holes, we would need helipads, or we'd have to obviously get a license to cut to clear out the areas that we would we'd want to drill off of road-based, which would be equally expensive, if not more expensive. So heli would probably be the case. Hushamu, to complete the infill drilling, would require helipads. I'd say any type of continuous infill drilling, resource drilling, to be complete would require either us opening up an area to obviously go road based, or we would use heli. So the considered program for next year, 2024, as you can imagine, is based around the NorthWest Expo area. We're currently going through the economics of whether to do road-based drilling with obviously occupant license to cut and getting that area opened up versus helipad drilling.
Okay, so if looking forward towards like 2025, you're going to see more more helicopter drilling then?
Okay, so I think the answer lies with regards to how aggressive are we going to define a matrix drilling program, right? So matrix drilling is essentially a program that defines, call it a measured and indicated resource, right? And it's, infill holes. It's between, for porphyries, it's usually between 50 to 100 meters spacings. And, each program would cost, well, Cushman would cost about $10 million, $8 more million. Pemberton Hills would cost between $20 to $30 million. NorthWest Expo, depending on what we find, would cost X million dollars. We don't know what the cost is right now. So your question is going to be determined by where we allocate our capital to. So if we have $20, $30 million to go after Pemberton Hills, that it doesn't completely dilute us, i.e. through potential partnerships or whatever you will, then we would actually consider opening up the areas and doing a proper program around an area that is opened up and does not require a helicopter pad. So we'd build roads to actually get there to access the targets, right? If we were to do one-offs, which is what we're doing at Pemberton Hills, right? So right now, this is exploration discovery. So we've defined 14 holes for exploration discovery. We're putting a couple holes down ourselves. We started with holes that we thought were not only accessible through roads, but holes that we had the highest probability. So in that case, we obviously didn't need helis. But there will be, even from an exploration program, there will be situations that make sense to use helipads as opposed to building new roads, if you could imagine, right? So I think the answer to your question is helis are a nice substitute for a major program that require roads to be built.
Okay.
I know it's not a clear answer because we haven't clearly defined what our 2024 or 2025 program looks like today. And that will come after we receive all of our 14 holes that we are currently waiting for to be cut and assayed.
So we probably can't talk about money either, because I wanted to ask you how much you're budgeting and what you're expecting to spend next year, how many meters, when does the program start, all those type of things we're going to know once you have the assays out.
Or once we have our budget, right? Like, I mean, in the end, I think that I can give you very broad parameters, which is our exploration budgets for the last 2 years was approximately $7 million a year. We've done 2 flow-through financings at 60% premiums to the back end at approximately $7 million per year. I think this program specifically really gave us a very good return for that $7 million. And I can say that, we are not, because we're owned 40%, 4 people own 40% of our companies, 2 of which you mentioned. We're not going to haphazardly dilute our shareholders unless we could see that ratio of return for money spent. So it's not going to be over aggressive dilution. So we're $55 million market cap company today. You can assume that, anything above 15% dilution at the equity level is unreasonable. The other, I guess, factor that is playing into our thought is that strategically, this is a very attractive project to a number of parties who are looking for equity ownerships at the project, which would yield a considerable amount of money without shareholder dilution, but obviously it would as it relates to project dilution. So we are now currently assessing those proposals to determine, again, how much we really need without over diluting. So it doesn't make any sense for us to raise $20 million if we only need 7, right, for 2024, right? And our results that are coming in over the next couple of weeks and months will determine how aggressive we want to go, right? And of course, the market's going to determine how aggressive we want to go. So the wonderful thing about this project is it is a very flexible project around going as fast or going as slow as we kind of want it, depending on preserving shareholder value, which inherently is making sure that you don't over dilute, right? For activities that will not generate the 3, 4, 5 times return for the money that you've just raised, right? So access to capital for us is not a problem. I can absolutely tell you, and this is not, puffing a shoulder out or, saying anything that is, too over promotional, but we could raise $20-30 million if we want to. The problem is what level of dilution at the equity or the project level are we willing to take, given that we're all owners in this, right? I own over 10 million shares on a partially diluted basis. My chairman owns over 20 million shares. Gentili owns almost 20 million shares, right? How do we progress this in a way that is reasonable and perhaps consistent to where the market is today? And that's really what we've endeavored to do. And I'd argue that's the reason why we've outperformed almost every single one of our peers over the last 3 years, is because we've been very, very, very conscious about not over budgeting for things that do not make a difference in the current market.
How much money do you have left in treasury, in your treasury now? That's something that why I'm asking this is because that's something the market obviously looks at. Yep. And I've noticed that the companies who need capital, well, obviously they tend to trade at lower valuations because the market knows that eventually you're going to have to come on to the market. So how much money do you have left now?
So those are two separate questions. So obviously, I can't disclose anything beyond what you've disclosed, the $6 million of the last quarter that we reported. What I can disclose is that we are fully funded for all the programs I just described. So that's the couple of holes at Pemberton, that's the step out holes at NorthWest Expo, that's the infill holes to get the resources based at NorthWest Expo, that's the 6+ holes at Goodspeed, which we didn't even talk about, which is only 3 kilometers east. That's the metallurgical work at NorthWest Expo. And then our hard dollars we're well funded into next year, well into next year. So that's what I can give you in terms of parameters. The second question is actually a little bit of it's an interesting one, right? Because there is game theory around when people position for an equity deal, and that potentially has negative impacts on share price. What I can tell you with great uncertainty is our last deal that was essentially a rights offering with our major shareholders and myself was done at market with no warrants because we didn't see terms we liked in the market. So if we're going to give away stock at really low prices, right, we're going to give it to ourselves, right? We're going to just issue money for rights offerings. And so I think the answer is we have a very strong cornerstone investor group. As I mentioned, we have opportunities to sell portions of the project equity, which will mean not a single share gets issued. And that's going to be juxtaposed against the quality of investors that are interested in getting into our story as a cornerstone. We've been very successful in getting 3 billionaires into the story over the last few years, and call it 8 institutions. And so those are the types of investors that we're looking for, not short money, fast money. I think that's the other peril of investing in junior companies, is that the junior companies tend to really get seduced by fast money deals that give them obviously lifelines for the next year or so. But that liquidity comes at a massive cost, and it comes at a tremendous amount of peril around share price pressures as these hedge funds, fast money guys, put their position ons to make their 15% returns, right? So this is a space that I know too well, because it was obviously part of my business over the last 20 years. And it's really something that we have stayed away from successfully, which, I think has served us, again, quite well.
Right. And in terms of You're also, when you see fully financed, that means G&A too, I'm assuming.
Yeah, so the hard dollars is the G&A, so that gets us well into next year, mid to late next year.
Okay. How's
Um,
G&A, by the way?
it's one of the lowest on the street. So obviously we have to report to our compensation committee to ensure that we are acting reasonably as it relates to our G&A. It's approximately $100,000 a month, so 1.2 million a year. Which in any respect for a company that is as active as we are, is absolutely paltry. So that's our run rate, and we are looking to even further cut costs for 2024 on the G&A perspective, and that's going to take the form of mostly coming from the IR budget, which I think is been it's no mystery to anybody, but in a market where no one really wants to listen to news stories, to have a robust IR budget and not a targeted IR budget is not prudent. And so we are going to adjust that. We're going to make it a lot more targeted around things that have been effective for us in the past, and not be random about just obviously spending money on travel and attending conferences that quite frankly have no impact in a downward environment.
Well, you and I met in London on a conference that was interesting to witness, and I hope I'm gonna see better ones. So but yeah, it was it is a thing. I think if you ask the average retail investor out there, they would want you to spend $0 on promotion, but that's obviously not doable either. I mean, you have to be trying to lower your cost of capital is what you're doing.
Yeah, on promotion, yeah, I think the promotion part, I would hesitate. I would, I don't want to accuse anybody, but I think I'd say that if the idea is to spend $0 on promotion, then I'm not doing my job, right?
Right.
I need to be out there telling people the story, and you can't do that without a good story, without good content, without good distribution. But you need also multiple facets of distribution in order for it to be effective. Like, you need to have the person that people listen to as part of that distribution to effectively have your story resonate, right? So I have my core group of people that follow me. Michael Gentili has his core group of people that follow him. Dale Corman has a core group of people that follow him. That's fantastic. So the more we can expand that, which is what we're doing, obviously, the broader. That's how you make an IR program work. It's not by attending conferences. It's not by just checking boxes on things to do. And I think that we all have to think smarter on how we spend our dollars. And it doesn't mean spending nothing. It means that you have to be smarter in doing it. And it's disruptive, but if you're not capable of figuring out solutions in a disruptive environment, then you're not going to survive. And, I think we've seen a number of situations in the market today that, suggested that there is shareholder revolt. There's proxy battles, successful proxy battles, many of them, in fact. That's when when you're in the bottom of the market, when there's so much dissonance between shareholders, management teams, and boards, that you see successful proxy battles actually occurring. And I think that suffice it to say, having a shareholder base of 4 guys, 40%, that are 100% aligned in how the ship is moving, then that's the thing that causes great comfort to me. And the reason why I'm here, I think suffice to say, just based on my background, I could be doing a lot of things with my time. And as I mentioned before, time is probably the most important commodity and asset that I have. And I think that to have that level of alignment with shareholders and board members that we do really does make this feel like an exceptionally strong team. We believe we have an exceptionally strong asset, and we believe we have the right approach, certainly long-term approach. People don't realize this, but Dale Corman, our chairman, he's an octogenarian. He has been in this business forever. He has obviously done deals like Penasquito, where he pretty much bought it for nothing and sold it to Glamis Gold Corp for $1.2 billion 6 years later. He's created Western Copper, obviously created this company, Northisle Copper and Gold. He founded and developed and sold San Nicolas to Teck, which now Teck and Agnico are partnering up at a almost $1 billion valuation. So this is a guy that's been around for a tremendous amount of time. I speak to him every day. The wealth of knowledge and perspective that he gives as our chairman is undisputable. And he knows that this is not a very short-term game. This is an extremely long-term game, and there's a time for everything. So, for me to have that mentor, for me to have that direction, for the company to have, this compilation of excellent people steering the ship, I think is quite unique.
And also something else that does, that is intended for doing your marketing is the drill bit. The drill bit does the best marketing, right? And so you have plenty of results to release over the next couple of months. I assume, when do you start? Are we going to see something in November already, or is that more of December, January, and so on?
Yeah, so that's a very good question. As I said, content is part of the three things I talked about, and we have a ton of content coming out over the next few months. And so what is that? Right now, we're going to have the release of our completed phase 2 drill program for NorthWest Expo resources. We're going to have after that, we're going to have the step outs around NorthWest Expo, plus the hopefully expansion of this high grade zone, this 130 meter high grade zone, which we're going east and west and then southeast. We're then going to release an area we call Goodspeed, that is just 3 kilometers east of what we're talking about. So perhaps a different system, but if similarly very, very close to what we're having there. And we've kind of pre-released some of our thoughts on that a few months ago. We have the polls that are obviously going to come out of Pemberton, which is obviously meant to be discovery holes around what we believe is one of the larger systems in the world in play today. We're going to come out with our metallurgy, which we talked about, that I think is going to show very strong progress based on what we originally have at Hushmu, given the 4 to 5 times higher grades in the gold zone. At that point in time, we're probably going to be prepared to release our 2024 programs, which are all going to be defined from all of these results that are going to be coming into over the next couple of months.
I'll be looking forward to that. I think I've gone through a whole lot. There's a lot more to talk about, but I hope we can further the discussion at that stage. Is there anything else that you came here hoping to talk about, but I'm failing to bring up?
No, I think this is fantastic, very thorough. I really appreciate your questions. I know that this is a bit of a longer discussion, but hopefully people are willing to dig into this story. I think it's absolutely worthwhile to do so, given the fact that in an environment like this, you do not want to be a one-trick pony. You do not want to have just exploration success driving you. You have to have an underpinning value, fundamental valuation that people feel comfortable hanging their hat on. And that's what we've defined as part of our PEA, our $1.1 billion PEA. We're currently a $55 million market cap. We truly believe that that PEA is going to define a project does define a project that is extraordinarily relevant in the second half of a copper cycle, which I think we're approaching reasonably fast. But in the interim, we do have a very, very exciting exploration story around this high-grade gold zone, where we're seeing intercepts that even the senior gold companies would support. That this is a very, very significant discovery hole in an area that, quite frankly, is untested.
Right, Sam. Well, I appreciate your time and thank you for talking to me.
Thank you very much, Antonio.